CNBC TV 18, embarking on a quarter century of excellence.
Hello and welcome to Power Breakfast and welcome to our 25th year in existence. It's a proud moment for the entire CNBC TV 18 family as we embark on a quarter century of excellence. So I want to take this opportunity on behalf of the entire team to thank all of our viewers for their continued support and loyalty through these years. Thank you for being with us on this journey and for being the most wonderful audience. That said, let's kickstart the show. We have a lot to get through. Here are the top headlines that we're looking at today. Wall Street closes with losses as the Dow Jones and S&P 500 correct for the third straight day in a volatile session. Jobs data for November also indicates that the hot jobs market is now cooling. The 10-year Treasury yield slips. Asian markets open largely lower on the back of a weak handover from Wall Street. The GIFT Nifty is indicating a flat start for the Indian market. Crude continues to correct for the fifth straight day. Brent slips over 3% to trade below $75 a barrel as prices continue to fall despite the OPEC's production cuts. Gold consolidates around $20, $50 an ounce as investors await certainty on the beginning of the Fed's rate cuts. And sources tell CNBC TV 18 that the government is working on a new EV policy aimed at attracting players with global reach and scale to India. The new policy is likely to attract investments by reducing import duties temporarily. And finally, on our special day, we have the best minds from the market and corporate India who will be with us through the day for this milestone that we have achieved. So just in a short while from now, you will hear from the likes of James Sullivan, S. Narain, Sameer Arora, Sridhar Sivaram, Nilesh Shah for their views on the market. From India Inc., we will have SBI Chairman Dinesh Khara, M&M's Rajesh Jejurikar, L&T's Shankar Raman, and many, many more who will join us on this big day. Also at 10:30 a.m. today, we have market veteran Ramdev Agarwal, who will be with us as guest editor, where he will discuss the rise and fall and resurgence of Zomato with the management. So stay tuned to CNBC TV 18 for an action-packed day. All right, so remember, this is going to be a solid day for all of us. We're going to bring you the very best. But for now, let's kickstart the show by taking a look at what the global handover has really been like. Like I mentioned, the US markets did end, not so great. It was pretty muted over there. And you have all of Asia, which is in the red right now, barring just the Taiwanese index, which is seeing mild green right now. So what's leading the losses is the Nikkei market. The Nikkei market this entire week has had one up day, one down day. Today, it is seeing a cut of over 500 points. So, that market definitely under pressure. For the week, it's a 1.6% cut. Hong Kong, like you can see, is down around 260 points, so over 1.5% gone there as well. And most of the markets, whether it's Kospi, Straits, Shanghai, all of them trading with cuts this morning. The only market, like I mentioned, which is in the green from the Asia Pac is the Taiwanese index. Nothing much to talk about, just around 4 points higher there. The implied open for our own markets will come up for you. And it is indicating that the start for our own markets will be very flat. But of course, we've had a lot of solid sessions. It's been a good week so far. We're just around 4 points higher right now for the GIFT Nifty. So we could open maybe around that 20,940 kind of mark. That's what's happening across Asia. But let's also talk about the US now, because the Dow lost around 70 points at the close. The S&P 500 was down around 18 points. And the tech-heavy Nasdaq composite was also under pressure, around 83 points at the end of the trading session. So this is the third straight day of losses that we're seeing for the Dow and S&P, the first since October for both of these indices. So that's the market picture as far as the US goes. But I also want to bring you some important trends from the US labor market now, because private payrolls in the month of November rose by 103,000. This is less than the forecasted amount of 128,000 according to private payrolls processed by ADP. Now let's listen in to what some chief economists have to say about this data that really came through and the trends that we're seeing in the US labor market. Listen in.
Right now it's solid. We're treading water in terms of trend. We're seeing leisure and hospitality go back to trend, but there's still some weakness in the labor market that I don't like. I don't like to see manufacturing slump the way it has, even though the strikes are over. We didn't see that big boost come back into the November. So there's some weakness in the labor market that I think is concerning. But overall, big picture, yeah, we're still on track for that soft landing that's been talked about. The weakness, though, should stay top of mind in the labor market.
All right, that is some important opinion coming in. But with that, I also want to bring you the final update on our global market wrap this morning. European equities closed higher on Wednesday. So the CAC index was up around 50 points. The German DAX surged over 120 points. That index has really been having quite a good week, touching another fresh record high. And the FTSE saw gains of around 25 points. Now, markets in Europe also rallied following the reinforced expectations of rate cuts from the ECB starting next year. And that is why you have a green screen as far as the European markets go. That's what's happening globally. But let's now talk about all of the cues that you should track from an India standpoint, some of the stocks that you should keep on your radar today as well. We have our research team joining us. Hormaz, Vivek, Mangalam are all with us now to take us through the trade setup. Guys, a very good morning to all of you and happy 25 to everybody as well. But, kickstarting things now, Vivek, the handover has been a little bit weak, but, there are a lot of cues to track from a domestic standpoint as well.
Well, absolutely, happy 25 to you too and our viewers. And amidst that backdrop, Indian markets continue to remain at record high. Like you mentioned, global handover, quite muted, 3 straight sessions of mild cuts as far as the US markets are concerned. But what we will take, quite a bit of solace is from the fact that crude oil prices continue to decline. In fact, yesterday, it was quite a steep cut, over 3% fall over there. And Brent futures now trading near a very comfortable $74 a barrel mark. Now, coming to the Indian markets yesterday, again, one more day where record highs were hit. However, in yesterday's trading session, what we did witness was the fact that Nifty Bank, from the higher levels, gave up quite a lot of gains and in fact ended in the red territory and the negative territory. Along with that, some key trends that we witnessed in yesterday's trading session. All of the fertilizer pack, on hopes of a higher subsidy, the entire fertilizer pack was up. So today will be interesting to see whether that momentum is sustained. On the other hand, on the back of anticipated, negative news flow, a lot of sugar stocks actually saw significant selling pressure. So again, some clarity on that is something that the markets will watch out for. Today, I expect some large deals. So you would see Warburg Pincus, selling stake in Bharti Airtel, in IDFC First Bank. So we'll be tracking that as well. Also remember, Amphi data as well as tomorrow's RBI MPC meet is something that the markets will take cues from. Like you mentioned, Asian markets GIFT Nifty indicating a subdued start for our own markets today.
Okay, subdued start. Let's see how we go from there. Vivek, thanks a lot for that. We have Hormaz now to take us through the entire list of stocks that we should watch for. Hormaz, there's been a lot of action post-market close.
As always, isn't it? And it's a big day, so there will be big stocks in focus. I'll start off with Bharti Airtel, where Bloomberg reports that Warburg Pincus is planning to raise $211 million via a block deal, and they're offering 17.5 million shares at a floor price of 1,005 rupees. Now, remember that CNBC TV18 has not independently verified this report. IDFC First Bank, where Cloverdale Investments, which is also an affiliate of Warburg Pincus, they'll be selling 1.3% stake. The deal size is likely to be $100 million and a floor price is supposed to be 85.7 rupees a share, and there will be a lockup of 45 days on the sale of further shares. Now, Ircon International, the government is planning to sell an 8% stake through an offer for sale. The base offer will be 4% with a green shoe option of another 4%. The OFS for non-retail investors will open today and for retail tomorrow. Now, remember that as of the September the 30th, the government owns 73.1% stake in Ircon, and the stock has tripled so far in 2023. TV18 broadcast, TV18 and E18 will merge with Network 18, where TV18 shareholders will get 100 Network 18 shares for every 172 that they have, and E18 shareholders will get 19 Network 18 shares for every 1 share that they have. Dr. Reddy's, they have entered into an exclusive collaboration with Koya Therapeutics, and they are going to develop and commercialize Koya 302, and that is used in the treatment of amyotrophic lateral sclerosis. Now, Bharat Electronics, defense stocks are getting orders again. It's received an order worth 580 crores from the Indian Army, and so far in FY24, that has taken their total order inflow to 18,298 crores. SpiceJet, they are going to hold a board meeting on the 11th of December to consider fundraising. Brigade Enterprises, they have signed a joint development agreement to develop a grade A office space in Bangalore CBD, and they are expecting a development value of 500 crores from that. And lastly, Paytm, where they held an analyst call yesterday, where they said that they are going to expand the higher ticket loan distribution and reduce the distribution loans of less than 50,000 rupees. Back to you.
All right, that is a lot of stocks to track. Hormaz, thanks a lot for filling us in with all of the action. Also, look out for the entire oil impact, right? There's been a 3% cut. So the usual, oil and gas companies, aviation, paints, keep an eye out on that. But finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Hi, Mangalam.
Good morning. So, the futures and options space looks rather bright as far as the action is concerned. Why do I say that? Because all dips are being bought in the markets. If you just take a look at the way the Nifty performed yesterday as well, yes, there was a bit of an intraday dip, but from there, we saw the rally, which was much higher, and we ended virtually at the high point of trade and a fresh record high too. And this despite the Nifty Bank underperforming, the Nifty Bank pausing for breath, so to say. The handover between Nifty Bank and Nifty IT was rather, smooth, and as a result of which, even as the Nifty Bank ended lower by about 1/3%, we had the Nifty IT index up by 1.7%, and that supported the Nifty itself. There was a mild sell-off from the FIs, about 80 odd crores, but nothing really to complain, largely because they've been buying for the last 9 sessions. So after 20,000 crore worth purchase, 80 crore selling is something that the street could absorb, and it did indeed absorb as well. But what was the positive was in index futures, there was a 2,000 crore worth purchase by the FIs. They added 12,000 long contracts and they covered nearly 15,000 short contracts. So the net delta was close to around 27,000 contracts on the long side itself. And as a result of which, the FII long exposure has jumped to 55% versus 45%. What does this mean? The FIIs have turned net long in index futures for the first time since September 22nd itself. So that's a big positive. The other big positive is that despite Nifty Bank's underperformance, the FIs are buying Nifty Bank futures and they are buying more than what they did in the previous trading session. So for instance, a couple of days ago, the purchase were in index futures for the Nifty Bank by FIs of 500 crores, then moved to around 700 crores. And yesterday, that number was 1,500 odd crores. So that's a big positive. It's a Thursday, so Nifty options expiry, the weekly options expiry. Out there, the active options are 20,900 put, telling you that there is a fair amount of support at lower levels for the Nifty. And 21,050 call has been rather active. So that is something we'll be watching out for in terms of a bit of a resistance on the way up. But were we to cross that, then 21,100 call writers or call buyers have been rather active for a premium of 11 odd rupees as well. It's been a stock-specific market. A lot of them seeing, downticks. So Canfin Homes is the one which has seen a fair amount of shorting and a lot of long positions added on names like HAL, Tata Power, and SAIL, all of them doing well in trade yesterday.
Okay, Mangalam, thanks a lot for taking us through all of those cues from the future space as well. With that, we do need to get into a short break. But on the other side, we're going to shift focus and talk all about an important story. Sources tell CNBC TV 18 that the government is working towards a new EV manufacturing policy. Stay tuned. We're going to bring you all of the details on the other side.
First of all, congratulations for 25 years for CNBC. I've been an audience of yours.
CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. Let me get you an exclusive now. Sources are telling CNBC TV 18 that the government is working on a new EV manufacturing policy that is aimed at pure EV players with a global reach. So Parikshit is here to tell us more on this. Parikshit, what are you picking up?
The central government is working on a new electric vehicle manufacturing policy which will be separate from subsidies under FAME and PLI. This will be aimed at attracting pure EV players with a global reach and scale to make in India. Sources tell us that the government is keen on attracting EV makers like Vietnam's VinFast and US EV maker Tesla. The new policy would entail attracting investments by reducing duties temporarily. Sources say the government is considering Tesla's request for reducing import duties from 100% to 15% for a 2 to 3 year period till the company begins manufacturing operations. CNBC TV 18 has learned that Tesla is seeking an import duty reduction to 15% on 30,000 electric cars. The company is believed to be considering a $2 billion investment for the India market. The government, however, has made it clear that no policy tweak can be for Tesla alone. We learned that 5 top luxury car makers have been consulted by the Indian government. Domestic car makers have expressed concern about such duty concessions as they feel it goes against the localization drive. The government, we are told, is looking at ways to balance interests of domestic car makers. As part of the policy, companies may be asked to submit bank guarantees which would be encashed if the company does not begin manufacturing within the stipulated period. The reason why this is being done is to give foreign players an opportunity to compete in the India market till the time they begin manufacturing, rather than imposing a 100% duty from the start of sales operations. There are reports that an announcement could be made by Tesla by January, but there is no confirmation of this either from the company or from the government.
All right, very important details there. Pariksha, thanks a lot for bringing us all of those details. With that, we need to get into a short break. But on the other side, we're going to track the cues from the commodity markets. There's been a 3% fall in crude overnight. We'll talk about that and lots more in just a bit.
Happy birthday, CNBC TV in India.
CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Power Breakfast here on CNBC TV 18. And we have Manisha joining us now to take us through what's going on with the commodity space. Manisha, first of all, a very happy 25th to you and to the entire team. But take us through what's going on with the commodity markets. There was yet again a big slip that we saw in crude prices.
Well, absolutely, and happy 25th to all of us, Pavitra. As far as the crude oil prices go, well, we did see 4% decline overnight. It's trading at a 5-month lows, and we've broken below $70 a barrel for the WTI crude oil prices now. Well, the reason being that while the U.S. Crude inventories saw a decline, the U.S. gasoline inventories have seen a surge of around 5.4 million barrels. And it's not just crude. Across sector, when you look at energy, we are looking at sharp declines. For example, the natural gas prices are trading at a 13-week lows. Heating oil is at a 4-month lows. Gasoline prices are trading at a 1-year low. So there is a sharp decline. There are concerns about demand. The economic data has been coming in on the weaker side, and the supplies have been increasing, and so much so that the markets believe that we could be looking at a surplus in this year and the next as well. So that's what's weighing onto the markets here. But apart from crude, everything else, for example, the precious metal prices have seen a surge. What also has seen a decline, though, has been the global sugar prices. They also fell 5% overnight and trading at a 3-month lows right now.
Okay, Manisha, thanks a lot for getting us all of those details in terms of the action from the commodity markets. For now, we're going to wind down on the show with the news that the Asian markets are all in the red right now. The GIFT Nifty, by the way, has slipped a little bit more. So we're currently just around 5 points in the red. But who knows, maybe the party at CNBC will have it back up. That's all on this edition of Power Breakfast. Stay tuned, Bazaar, and a power-packed Bazaar comes up next.
I wish all the best CNBC 18 a very happy birthday for on this auspicious day, and wish you all the best.